So how much of a down payment you need to bring on a home purchase per loan type? So I'm going to go over the three main type of QM, Fannie Mae, Freddie Mac accepted loans. This is the majority of the market. This is the majority of the loans out there, mortgage loans out there. So one is conventional. You can bring as low as 3% down. You have to meet certain qualifications for debt to income. Obviously, you have to have pretty strong credit. And you have to be considered a first-time home buyer to get the 3% down. Now, if you had a home before and you sold it and you haven't owned a home in a number of years, believe it or not, you may still be considered first-time. Check with your loan officer, see what the exact situation is, how many years need to go by. Worst case, if you're not considered a first-time home buyer anymore, 5% is the minimum down. Keep in mind, even though this program offers low down payments, you're going to have to pay mortgage insurance if you put less than 20% down. Also, you're going to pay a lot more interest over the life of the loan because you're borrowing more. FHA has a good program for this. It's only 3.5% down if your credit is in line with the guidelines. That is regardless of if you're a first-time home buyer or not. And you can buy a home of up to 4 units, right? Now you have to intend to live in one of the units for a certain amount of time. But using this strategy, imagine putting 3.5% down on a 4-unit property. And if the other 3 units are enough to pay your expenses, you're basically living free with 3 other people paying down your mortgage for you. So that is a very good program, and I have an article about that in my newsletter, which you can subscribe to below. Number 3 is VA. VA, you can actually put 0% down. Okay, so if you're VA eligible, you can put 0% down. Now, you have to have fairly good credit for this, and there might be some other expenses that cannot be rolled into the loan. So don't think of it as, I don't need, I have no money in the bank and I could just get a house with a VA loan. And there's other considerations with the VA loan. If you're not eligible to receive VA disability of at least 10%, that means more than likely you're going to have to pay a funding fee, which can get built into your loan. So there's a lot of advantages to the VA program, and there are some disadvantages like the funding fee if you are required to pay it. But these are ways you can put a pretty minimum amount of money down. You just want to be smart with your decision of where you buy, because you don't want to wind up underwater on your mortgage. But these options are available to you. Again, I'll leave a link to my newsletter. It gives a lot of good detail on this and other topics, as well as some very helpful links.